Hey guys, it's Will here. I want to do a video on the markets. Yesterday, some interesting thing happened, sort of surprising from my perspective, but on CNBC here, it says the Bank of Japan just shocked the markets. So yesterday, they decided to change their policy in the yield curve control. So basically, that has a big impact. If Treasury, they won't be buying as many T-bills and stuff like that. So because their interest rate will go up locally for bonds. So, but like recently you had the Fed. It was pretty positive in my opinion. They raised 0.25%, but everybody expected that. And then the GDP came out, and that was stronger than expected. So the idea of a recession didn't seem to be on the cards in terms of the Fed, their perspective. And then all of a sudden, when this came out, because I was pretty shocked, if you go, let's say 10-minute chart, you had this gap up in the morning yesterday on the 27th of July. It started up way up here, and then this huge drop. And it's recovering today. We'll see if it lasts, but and that's just on the NASDAQ. But if we go to, I'm just going to jump to another tab I have. I just want to mention that TC2000, I have all these tabs. This is basically a watch list, each of these tabs. And then you can filter them. But this is sectors of ETFs that I've built myself. And I sort them, I can sort them in different ways, but if we invert this to percent change, I just want to mention that you should pick up TC2000. You can get a free trial or $25 off your subscription if you decide to sign up for a monthly subscription, which I have. I've had it for years. You can put some warnings on your charts if you wanted to, different things you could do. Like on a 10-minute chart, you could put an alert on a moving average. For example, if you're worried about something, or a volatility stop crosses from green to red or whatever. So if I look at this chart and I go on the 21 exponential, I can set an alert and add a condition. And down here you'll see, if you say greater than, you can see crossing up the various moving averages or crossing up the volatility stops, So that way you can get alerted when if something happens, if you've got, money invested in these stocks or ETFs. But if we look at the percent change invertedly from the biggest drops yesterday, GBTC and Ethereum, Remix, which is a rare earth metals, dropped 4%, hydrogen. One of the things with TC2000 that's nice is you can see pre-market. So you'll be able to see in some of these ETFs and a lot more stocks what's happening in the morning. So you can see right now it says 436. But let's just go, I'm going to reverse this back up to there. Right now it's 7:52 Eastern time in the States. And you can see that this is up almost 3%. It's not quite 9 o'clock in the morning or 8 o'clock in the morning Eastern time. So we'll see if this lasts. Like I have a little line here, or the 21 EMA is a potential support, and I drew a line underneath the previous day's up candle, and I did that for a bunch of ETFs where we had a pullback. We're still above the 21 EMA, but it's kind of a low point, a recent low point. So every so often you get this pullback, 21 EMA or the 50 or various other spots, and you can draw a line as a low. That would be where you might put your stop below that point, or you can use a moving average or whatever you want. You could use volatility stops like once it crosses that volatility stop, if you want to keep moving it up, but you'll get stopped out, more quickly. So there's trade-offs with different methodologies. But anyway, I usually talk about the markets. NASDAQ, like I said, it's still above the 21 EMA here. There are red volatility stops. There's a sort of a declining momentum here. A bit of a recovery from yesterday as of this morning at 1 o'clock, as of this morning in the pre-markets. But the TBF, I've got a few things in addition to the main markets here because it indicates the interest rates and the US dollar, which I'll talk about. But you can see how this is the inverse. So that means that when this goes up, interest rates are going up. It's the inverse of TLT, which is the bond fund. So you can see how we have support at the 50 and we're going up. That would indicate rising rates. SJB is a shorter term yield. Yesterday we had that bounce there. So, and then the US dollar, it was going down and that was good for the market. Then we had this big reversal. This is kind of like a kicker signal. So we have a down black candle and then an up white candle in the opposite direction with a gap in between. So this, from a candlestick pattern, is a kicker signal, which it's kind of in a trend. Like it's not just a reversal spot, but it's in an uptrend. So that would indicate that the dollar was going to go up more, which usually indicates rising rates, and that strengthened the dollar. So that's not good generally for the markets. But then you have the VIX, which is going down again today. So it's a very strange situation. But right now, so there's kind of like a rebound from yesterday's sell-off. But I am concerned, like I said, with the interest in the dollar in terms of how that impacts the markets. But I do have those low spots underneath the NASDAQ here, which would be a definite spot to be concerned if it breaks below that. So for example, if I look at GBDC, we had this downtrend, red volatility stops breaking below the 21 curling down, the price percent oscillator pulling down, stochastics heading down, the relative strength compared to NASDAQ, sloping down as well. So when you start to get this breakdown of multiple situations with the 21 and this low spot, that's not looking good right now for the crypto and stuff like that. So we'll have to see if this stuff can sustain the uptrend or if that was a big reversal. But to me, this is a bearish engulfing candle. So this candle completely engulfs the previous candle, or even more, engulfs, two or maybe even the third candle. And we'll see what happens. But I like to look at this price percent oscillator, which is like MACD. It's sloping. It's starting to slope down. It's kind of flat right now, but you can see these histograms. That's the distance between the oscillator and the moving average. But so you have a bit of a down sloping histogram you see here, and this happened over here. Doesn't have to be long term or anything, but you start to see it kind of makes it obvious that you're heading down, and then it's just a matter of where it's going to get supported at. So these two bounced off the 50 and went up quite a bit. So everything looks good on the chart, like in terms of the Dow. It's still above the 21, positive volatility stops. Sorry about that. I'm just going to get a drink here. So the charts still look good in terms of it's above the 21, above volatility stops. This one had red volatility stops, but it has recovered from yesterday a bit. So it's still, potentially in a good situation. The ones that are, have bigger impacts are the ETFs because they're sector based. So they can go down and up a lot more. So look, this looked pretty bad because it's a huge bearish engulfing candle. So, all right, guys, don't forget you can pick up TC2000 in the link in the description, free trial or $25 off your subscription. And it's a great way to scan and organize all your stuff. So we'll talk to you in the next video.